Hi, everyone. My name is Jimmy Carroll. I'm the Vice President of Operations at Tech B2B Marketing, and welcome to this episode of the Manufacturing Matters podcast, where we dive into the trends and technologies reshaping manufacturing today. Before I dive into introductions today, I just wanted to note that this is a special episode for us, as it's our 100th episode of Manufacturing Matters. We first launched this 3 years ago at the Vision Show in Boston, A3's Vision Show, and now we're on the precipice of Automate, which we'll get to today shortly. We've had a lot of great conversations since then, and that includes nearly 40,000 YouTube subscribers now, and we just want to stop and say thank you. We really appreciate every single person who's ever listened or joined us. So for this special 100th episode, it's a panel discussion episode. We'll be talking about automation, tariffs, supply chain, and what's next. It's a sensitive topic, but one that we're very interested in diving into. I have the pleasure of being joined today by an excellent panel of industrial automation leaders, which includes Jeff Stello, who's chairman of the board at Metaphase Technologies, Jason Covar, who's GM of North America at the Imaging Source, Gerd Walter, who's president and COO at Creative Automation, and this year's recipient of the Engelberger Award for Leadership, Stu Shepherd, who's president of Shepherd Solutions, Inc. Now, before we jump right into the questions, Winn, why don't you go ahead and set the stage for us with a recap of the current state of affairs?
That's my pleasure. It's good to see you and be with you on this, Jimmy. I'm so glad we made it this far, and I know we'll do another 100 here in the next year or two. So look forward to talking with more everyone out there in the audience. Folks, as mentioned, my name is Winn Hardin, and I'm really excited about today's panel because while it's a very sensitive topic, it's probably the foremost item on all of our minds as we're trying to, those in the automation space, those in the manufacturing environment around the world, not just here in North America. So what could be more important for us to discuss, especially during just 2 weeks before Automate? And so I'm sure this will be a major topic of discussion in Detroit during the Automate, which is, of course, if you don't know, North America's largest trade show and technical conference on automation technologies, including robotics, machine vision, artificial intelligence, what else am I forgetting? Motion control. And I think I mentioned AI. All right. So as we know, as we all are aware, the last few months, tariffs has become a very hot topic, not just in North America, but around the world. However, these tariffs and the topic of tariffs and the impacts on supply chain are very much in flux. This comes after 2024 was a fairly flat year for manufacturing and automation technology. And now, as we were coming out of that, there are a lot of questions facing us ahead in 2025. So in the case of the US, while tariffs remain in place on China and several other of our key trading partners, dozens of other tariffs were put on a 90-day hold, I think maybe 1 or 2 weeks ago. And just this morning, there was news out of the White House talking that the Chinese tariffs could ease significantly and ease soon. So change seems to be the only constant going on in our marketplace right now. As they say, beware to live in interesting times, right? Now, as we know, many of the automation companies, including the gentleman on our panel today, source components from places like Vietnam, from India, from Korea, from China, while many other parts are made locally to serve domestic markets all around the world. So one of the topics we hope to discuss today is regarding tariffs, regarding supply chain, regarding automation tech. What are going to be the short and the long-term impacts of what we're going through right now, current state of affairs? Now, this isn't just a hypothetical debate. I think 2.5, 3 weeks ago, I received my first email from an automation provider talking about increasing their prices as a result of tariffs. Do they still feel that way right now? Interesting. A lot has happened in the last 3 weeks, and I'm sure our panel will be able to give us lots of insights about that. Now, we've also expected a number of new product introductions being in the insider space where many of us are, and especially here at Tech B2B. We hear about new products that are coming down the pipeline, maybe before they make it to the public. And we haven't heard a couple of key announcements, and that's surprising. Is that a result of the tariffs and the supply chain debates that are going on right now, or not? Are they just waiting for a big splash at Automate? We'll talk more about that today. Now, even though there's this uncertainty, it's not all bad news by any means. I mean, people say uncertainty is difficult for business, but if these supply chain changes do affect the global manufacturing footprint, this could result, and one of the topics we're going to ask our experts is, will this result in increased reshoring to domestic markets in Europe, in North America, in Asia? And if that's the case, then will that change how either on surplus automation markets, or what can we expect to see from retasking of existing solutions, right? And how might that impact demand? Will we see integration demand go through the roof? Will that be any kind of headwind on equipment suppliers? So I think these would be interesting points for discussion today. Now, thanks again, gentlemen, for joining us. And with this all in mind, I'd like to pose my first question to Stu Shepherd. Stu, a personal not appreciation, but personal congratulations, sir, on the Engelberger Award and a Lifetime Achievement Award. That's an amazing achievement in leadership. And don't think I'll ever get there, but nice job, Stu. So Stu, first question to you, sir, is what do you think about these tariffs right now? How are they impacting automation providers around the world today? And what do you expect to see in the near term?
Okay. So the near term, what I expect to see is a lot of indecision and a lot of confusion. One of the challenges is that the documents of exactly how the tariffs are going to be implemented and to what extent and for how long, all that's really gray and really confusing. So a lot of companies out there have domestic source for a lot of their engineering and other activities, but they buy components from other countries. So you have to go through country by country to see how does that tariff impact and how much inventory is around that may have already arrived in North America before the tariffs were applied. The challenge is that most integrators can't afford to buy stock and anticipate demand and grab extra robots or vision systems or other things, because who knows when the customers are going to free up and start ordering again. Because right now everybody's kind of hunkered down is the impression that I have, because we just kind of got out of COVID, the shipping crisis, the chip crisis, and changes in EV direction. The other thing that's hit simultaneously with the tariffs that also impacts manufacturing is changes in red dye approvals, and because that changes ingredients and how even some of the foods and other things are formulated.
Right.
But you also got some issues floating around out there that go across all of this that have to do with drug approvals and even the immunizations. The change in policy regarding immunizations have caused a lot of the automation related to creating immunizations to go away or go on hold. So
Right.
there's a lot of everybody kind of pulling up all engines stop, waiting to see when the smoke clears what's going to happen. And is this 90-day resting period truly 90 days, or is it longer and shorter than that?
So we don't expect Boeing's just chock full of cobots to being currently rush shipped over like iPhones were last week. Probably not going to have. Gerd, are you guys chartering your personal jets to be able to bring over some goods? Or
Yeah, I'm not doing that at this point, but I would agree with Stu. There is a lot of hesitancy. People aren't pulling the trigger on a lot of orders. There are starting to see some come through, but that's just more capital budgets or programs that were already in process.
mm-hmm.
The bigger programs, you haven't seen them make their jump. I mean, the whole issue is some cases the programs are relatively short. You got a couple of years, but then there are other projects like some of the bigger auto lines. That's 5 to 10 year program, and you've got a president that's going to be in there with his policies for 4 years. So the question is, will the following president continue a lot of these policies or not? And remember, Trump did tariffs in his first term.
Mm-hmm.
Carried a lot of them on. So I'm not trying to get political, but it's
Right.
Both parties are kind of in a protectionist mode. So, but
100%.
let's see how it plays.
And right before we started the panel, we were having a discussion, Stu, and you were talking a little bit about some of the manufacturing plants, long-term plans, multi-years to create new plants, and we're going to talk about reshoring, so we could wait a little bit on that if you want. But if you had any thoughts on that, but let me ask another question. When we had the COVID supply chain disruption, right, shipping got way behind. The cross transatlantic, Trans-Pacific, those lines were severely restricted. And then once the gates opened up, we had another problem, trying to play catch up. And today I was watching some Wall Street Journal commentators talk about, we have, and I don't know how they come up with this, but they're talking about like we have 3 to 6 weeks to be able to kind of normalize things, or the shipping disruption will extend, right? Even if things get resolved in 6 weeks, 90 days, 150 days. Does anybody have any thoughts on what that might do? Well, will shipping be a big thing, or since it's only a couple of months, not a big deal, not like COVID where we had years of shutdowns?
Well, I think shipping will not be impacted near term because you've already got commitments. You've already got product on the boats or on trucks, and they had to be delivered. So I think those deliveries that are currently there are going to go ahead and be fulfilled. I think the backlog is going to drop, and the number of shipments in the future are going to be delayed. But if it's already in the pipeline and it's already committed, there's contracts in place and people have signed those contracts.
Right.
Canceling contracts is super expensive and not value added. So I think near term, there'll be little to no impact on shipping. And if anything, it'll open up some of the shipping channels a little bit. We'd crawled out of the shipping crisis. We crawled out of the chips crisis to a large extent, but all that takes time. And the question is, how much time do we need based on what the policies are today and what they're going to be changed to next?
Right.
Yeah, and my comment to that is, I think a lot of us are getting tired of crawling out of one thing after another.
Yeah. The fighter in the ring who is really looking for that bell to ring so he can have 30 seconds of chill time.
Yeah.
Well, it just means one thing: change is constant. And
Right. 100%.
even back during the shipping issue, for us, Metaphase, we're a lighting manufacturer. It was just as difficult for us to deal with inflation and the price increases that were coming from U.S. manufacturers. That was a lot tougher. I mean, it's early here in this tariff discussion, and we're not overreacting, but that was a lot tougher when every week there were price increases for an extended period of time. Very hard to estimate where your prices are and quote things in advance.
100%.
This one, I think it reminds me of prior tax proposals where everybody gets all excited about different proposals going before Congress, and it takes months and years before they never get enacted anyway. So we got to be mindful of them, but at the same time, none of them are in effect yet. Or at least they're not impacting our costs yet. To the extent they are, they're just one source of some of our materials. We try to source as much of our materials here domestically as we can, so we're not completely dependent on foreign imports.
Beautiful.
Yeah, before I jump in and ask a question, but I just wanted to see if anybody else had any follow-up thoughts. Don't want to step on them, but if not, you guys have kind of naturally segued into some of the topics that I've wanted to talk about here, including COVID, supply chain, political strains, whatever. What are some ways that North American manufacturers can protect themselves against these types of future disruptions, like the ones we've seen in the last 5 years?
We got some protection on some of our projects and not so much on others, but we started adding terms to cover tariffs a while back in our quotes. You got some other flexibilities. We back during the supply chain, we put in some extra protective language just in our terms and conditions and our general quotes, to cover supply disruptions. So, it's the boring, tedious part, but sometimes you just gotta look at, talk to your lawyers and see what language you got in your quotes and in your terms.
No, good T's and C's is an excellent point, Gerd. So I 100% agree. Jason, as a chip guy, what are you seeing?
Yeah, I agree. I agree with the others. I think right now the biggest factor is the timing, right? The change that's happening. But you mentioned early the 90 days. Some manufacturers have already issued notices increasing. We're seeing those on a daily basis. And so I think right now it's determining how long to wait. Is it a matter of weeks? Is it truly 90 days? And so I think there's internal discussions based off of that. Until that's clarified in some way, I think there's a lot of companies that are kind of sitting and waiting, right, in terms of that time frame. So I think that's an important piece for us.
We're doing that. We made a commitment to our customers in October not to raise prices in 2025. And there was some talk of tariffs looming at that time, very not as much as there is today, but we're still committed to that. And as long as we can find alternate sources or do other things to offset some of those price increases, we're sticking to our pricing that we published in October, and we're going to do that as long as we can.
Jeff, do you attribute that a lot to diversification of your raw materials and your LED die supply chain, being able to source it from lots of different locations?
Yeah, it's diversification. It's also the cost mix. I mean, our materials cost is maybe 25% of the overall cost of our manufacturing. So it's not an exorbitant percentage that we can't overcome.
Right.
At the same time, as a company, as we're growing, we're always looking for ways to streamline the operations and to reduce costs. So we've been doing that pretty steadily over the last couple of years. The shipping crisis and the inflation really pushed us to do that over the last couple of years, and I think that's positioned us well for what we're dealing with right now.
I think one thing we'll be able to measure here in just a few days is the impact on some discretionary spending related to travel. A lot of my clients, as an example, had invited me to come to their facilities to actually conduct our meetings, but instead we've switched back to doing mostly virtual. Likewise, Automate's coming up, and it'll be interesting to see how much of an impact there is on attendance at Automate because of a number of companies slashing their travel budgets. And of course, travel has inflated a lot in the recent months. So I think we're going to see an impact on trade show spending, on trade show related travel and other things in our industry. And you'll find some other places where people are going to put the brakes on, at least until they have a handle on what the outcome of this is, just out of abundance of caution.
Stu, go ahead, Jason, please.
Yeah, just another point there is just the currency fluctuation, right? I think it might not be discussed as much.
Yeah,
we have facilities in Europe and in Asia. And even if you look at the euro, right? I mean, transactionally, USD is a lot. But I think it's also something to keep an eye on. If you take it back all the way back to 2014, I think there were some adjustments made then on pricing based off of just currency. Just another point to put on the table when we talk about this topic.
Stu, I'd like to ask you, do you, and riffing off something that Jeff was talking about earlier, is this an opportunity for companies to stay the course in terms of the pricing and grab market share? I mean, is that a strategy that you might be suggesting to folks?
Certainly that would be a chance if the customers are buying. The challenge is can you get enough volume to offset what else is going on out there.
Right.
But yeah, to me, every market disruption is a chance to adopt or adapt your strategies and methods of getting things done. Frankly, I like changes in the market that are going on in general, not these necessarily, but in general, because change causes people to think and reevaluate what they're doing. And likewise, people that are out there marketing their product need to pay very close attention to how to get the work done for the customer and how to attract the customer's interest. So I think it's going to help some companies focus on things like ease of use and ease of deployment and ease of support and try to make everything they can as fast and easy as they can, and maybe smaller projects instead of great big ones. To keep the momentum up, because I think the worst case scenario for some of these companies that are out there is there's readily available automation in the market today that works, that's proven to work, and we are not adopting it as fast in the US as other countries are. So now is the time to double down. The risk is, though, that with the tariffs and other changes in cost, have those automation solutions now priced themselves out of the range of being in the ROI range where customers are going to accept them. That's going to vary customer by customer, but it's going to take a much sharper pencil and a much more focused presentation to customers to get them to move off the sidelines and get back into the game on investing. So the suppliers out there need to be really on their best game to talk about customer value and risk reduction in order to get the customers attracted back into moving and buying equipment.
With this chapter coming so soon after the pandemic, Does that impact things? Does that give us an experience, a nearness of experience that we can leverage to affect? Did that teach us anything about either diversification of supply chains or the need to sharpen the pencil, or, don't focus on cutting edge, the highest margin solutions, or do so with the argument that you can grab market share customer if you jump on this now?
I would say a lot of companies have learned to be very nimble.
Right.
They've leaned out and they know how to be nimble. Other hand, there's.
And we say companies, Gerd, you're talking about our manufacturing customers, right?
Our customers, integrators like me,
right.
All our vendors. Everybody's had to learn to be nimble the last 6-7 years, and it's, that doesn't mean there isn't going to be some blood on the streets if this goes on a long time, but
yeah,
it also creates opportunities. So,
well, it does. It does make us stronger for those who survive.
Yeah.
Without question.
And I think the experience overall probably plays into companies' reactions coming through these pain points that we had in the past years. Maybe that delayed some initial reaction or quick decision making, maybe more methodical and looking at it kind of throughout the process, may be an impact of what we had just experienced a few years ago.
Right.
Well, let's not forget what we experienced a few years ago. When the pandemic hit, we didn't know how long and how deep, and it was a miscalculation of both of those. We all thought things were going to go to hell in a handbasket and they were going to stay there for years. It was a 6-month dip, and it came back stronger than ever. And I think the U.S. economy, in particular, always has a way of demonstrating resiliency and figuring out a way to make money. And I think it's it's too bad that people forget what we've lived through in the past. And we're seeing the same thing here, where you turn on the television and everything's exaggerated on a 24-hour basis, and people think it's never going to end. I don't think the countries are on a path of mutual destruction. I don't want to sound naive about it, but I don't think it's going to be something that goes on for an extended period of time. I think wiser heads will prevail, and we'll get through this, and people will move on.
Let's remember, most automation companies came out of COVID really in a strong position.
Absolutely.
Right?
Yeah. There was a bit of backlash in there because people overbought in the tail end of COVID, thinking that the supply lines are going to be tough and all that. And there was a bulge, and then there was a quiet period after that. I think we all learned from that what we should and shouldn't do on inventories. So I think there'll be less of a push-pull effect of inventories and lead times, now that we've come out the other side. I think everybody's a little bit more pragmatic in their approach on planning.
Mm-hmm.
I agree.
Yeah, one thing I wanted to ask you guys, really curious of your opinion, is, at the A3 Business Forum, I'm sure most of you were there. There's this theme of, when in terms of automation, in some ways we're only just beginning, right? There's so much room for growth. And one of the areas that people talk about when it comes to areas of growth is in small to medium-sized enterprise. I know it's a big thing that Jeff Bernstein's talked about, and numerous others. How does all of this impact those folks? Is it going to slow down that potential growth? No impact at all? Have you seen anything firsthand? I'm very curious.
Well, Metaphase is probably smaller than most of the companies on this panel, but we were experiencing the same thing they said at A3, where things were starting to pick up at the end of last year. In fact, they were pretty steadily. Getting the election out of the way eliminated another piece of uncertainty, and things were moving along smoothly. All of a sudden, in the middle of February, our quotes activity started to slow down. Fortunately, it came back 30 days later. But I think the biggest impact that's having on our business today is this uncertainty and buyers holding off on making decisions, and how long that will go, nobody knows. But again, I don't think it's going to be that long. The other thing that impacts us, where we do have products coming from overseas, is the customs administration process. And so we're in a small business, and every week matters and every day of production matters. And when we're at the end of the month, striving toward our target, and parts are held up in customs, that doesn't help our forecasting and our projections. But so that's another part, but that's only short-term impact.
Right.
I think one of the things I'm seeing with already this year, because of the effects of business in general, a lot of companies are looking at optimizing their current in-house equipment to try to squeeze out more overall operating efficiency out of the current equipment, because the lead time and cost and duty impact of buying new equipment is much higher. So I think the retrofit and the smaller adoption rates of the SMEs is going to turn just a little bit. There's some are going to be on the sideline for sure and holding off. But if they're trying to figure out how to increase production based on local demand increasing, they may be more likely to retrofit automation into existing equipment than they are to go out and buy new. Because to Gerd's point about being nimble, you can't wait for the lead time of new equipment. Sometimes you got to act now in order to hit those deliveries and hit those commitments. So I think the small companies will be maybe faster to turn on a second shift or third shift, or faster to put in retrofit automation to try to get their businesses optimized at a higher rate of production.
Perfect segue. So you see that smart manufacturers might be looking to add capacity at this opportunity to be able to answer domestic needs, and that brings up reshoring. So do we think if this goes on, if this is the new normal, how do you guys think this will impact reshoring?
It will go two different directions. Some stuff, especially already stuff in the pipeline to reshore, will reshore.
Yeah.
Especially if it's critical to the company as part of theirs. But then there's other companies, you're already hearing some of the automotive suppliers, especially the ones that are very labor intense. They're looking even farther south than Mexico. They're looking to Nicaragua, Honduras, Colombia. They'll make up the difference in tariffs by going someplace with even cheaper costs.
Right.
So tariffs are only one aspect of what was starting to get people talking about onshoring. There were actually other policy decisions that were being made or that are being promoted by this administration, such as repatriation of U.S. dollars, and also providing tax incentives for companies to invest here, and what will be taxed coming out of their plants versus products coming in from offshore. So I think tariffs is just one. Even the issue of tariffs didn't come up, I think the onshoring was already starting to build momentum here in the U.S.
I don't disagree.
Yeah.
I think though it's going to be focused more on the higher value or core competency arenas.
Yeah. What we'd been seeing was a lot of the reshoring was actually not coming to the United States, but coming to NAFTA and mostly to Mexico. You go to Mexico, there's new plants every place you turn down there. It's amazing. Reshoring didn't quite hit Canada. There's a lot of intrinsic costs in Canada and likewise in the US. So the tariff impact within the NAFTA countries has been kind of interesting. But the challenge gets to be is when you reshore back to the United States, you have to look at the entire supply chain and understand what the tariff impacts is at the component level. Because, case in point, I bought a vehicle here not too long ago, final assembly in the United States, but it's only 41% US content. So it has a ripple effect on the content of wherever that gets sourced from, which is not the end customer's decision. It's made by the manufacturers about where that content comes from. So, there'll be a lot of still indecision related to that about do you reshore? And again, the lead time to reshore to the United States is significant, especially if you have to have facilities or other things that take a long time to get implemented. It could be 3 to 5 years before you see the impact of what's going on. And the question gets to be is, will the weather vane swing the other direction, either during the current administration or the next administration?
Right.
Yeah.
Right. 100%.
I think, but going back to one of your guys' earlier points, first things first, and you're already starting to see some early glimmers, is there's a lot of capacity in the U.S. manufacturing. I mean, some of it's floating around 75 to 80. So they got capacity to ramp up plants. And, some of the automotives are making that decision. They're going to ramp up the more of the U.S. plants, slow down some of the other plants.
Right.
But, and there was also a reshoring. There's also what, on the global scale, they're calling localization, where they're building supply chains to serve local markets in that market. It was just broad diversification. The other big thing still to watch, though, is China. We got the big tariffs on that, but I was talking to some of my European suppliers, and some of them are quite scared, because they're already getting beat up by China, and there's people in Mexico getting beat up by China, and okay, China can't sell to the U.S. They're just going to flood the rest of the world even cheaper.
That's right.
That's a good point. It's interesting because I actually was wondering, that kind of goes to our next question, which, it's impossible this early to pick winners and losers, if or all or none, right? It's just going to be a wash and be a zero-sum game. But, Stu, you were talking earlier about a lot of reshoring going into Central America. So, and would we expect, and I really don't know what the proposed tariff right now between North America, between the U.S. and Mexico is. I know that was one of the ones that was paused, if I'm not mistaken, though, correct?
Actually, they were excluded for a while.
They were okay. Jeff, were you going to ask? So my next question was going to be Europe, certain European countries, Mexico. Do we see anybody who's actually going to really benefit from from a new global normal where supply chains are being at least redirected as friction starts here in different places?
I think one of the side impacts that's going to occur is the fact that other countries are going to have the luxury now of being able to focus on other markets besides the U.S. And in some cases, they may double down in some of those other markets that they want to go to that they just hadn't had time or focus to hit before. Unfortunately, on the China side of the business, there may be some countries and or suppliers that will partner with China because they got to survive. They got to make their businesses adopt accordingly. And the consumption of product that would normally go to the U.S. will now be available to go to these other countries at even a lower price and faster lead times. So that could create competition of those other countries to then turn around and export the finished goods to the U.S. and come in through the other door, so to speak. Because a lot of the thing is kind of unusual about the U.S. is, yes, we're a major exporter, but we still manufacture and consume more domestically than we export compared to a lot of other countries. And other countries survive on export more so than they do their own. Italy is a really good example, and certainly China, Japan, and Korea. Those countries are very skilled at exporting. If they take the eye off the ball of going to the U.S., where else are they going to create competition that will actually impact negatively the U.S. side of the equation? It's not easy to calculate that, and the risk is so much has changed so dramatically. In the past, we always saw incremental little adjustments.
Yeah.
This time, we're seeing wholesale cranks of the knobs, and that's making it tough to calculate what winds up coming out of all this.
Absolutely. And we're still in the first or second inning, right? I mean, it's
very early.
Baseball game to be played.
But I think that's an important factor as well here, right? Deploying capital, right? When you talk about reshoring in here, I mean, the ROI in that, if you're bringing it back from a ROI perspective of domestic only with a lesser blend of export, it looks a lot different, right? So, and while you're in an uncertain, more softer market, deploying capital in general, I think will impact some of these decisions and the adoption. So, more likely maybe augmentation and like retooling and taking older equipment and enhancing it, maybe a blend that you'll see before just complete reshoring and full automation.
Yeah.
Right on.
Other hand, I would also say one thing that's also hasn't been discussed that needs to be is all the retaliatory tariffs or retaliatory worries. Because there was an RFQ this morning. We're partnering with a firm in another country But the end customer wants to make sure it goes to that firm B primary because they want to avoid as much tariffs as possible.
Yeah.
So I'm not going to get the lead paper on that, you know.
Yeah.
And normally I would.
Yeah. And I could see our supply chains getting more complex as people try to find, I don't know if workaround is the right term to use in that case, but I mean, business goes where friction is the least. Right?
Yeah.
So,
And that goes with the financial market as well. Right now, interest rates in Europe are a little bit lower. So if you've got a European-based company, they're going to make their loans and their financial instruments in Europe to take advantage of the differences there. Because even a couple percentage points can be a huge difference of how much debt you're carrying and what else is going on. So as usual, the global market will cause everything to settle out eventually. The question gets to be is, when will we see changes in policies or release or other changes come as the global market figures out how to adjust and adopt this new normal.
right on.
When you ask the question, who are the winners and the losers, has there been a situation since World War II where the U.S. was not a winner?
I like living here. It's my favorite place. No disrespect to the world
I
out there.
agree. And again, I don't want to sound naive about it, but the U.S. economy and the consumer-based consumer spending and everything, the capital structure, everything we have as an advantage here is not going away. And the
Absolutely.
businesses are smart, the consumers are smart. That's not to say, it's an automatic, but if you ask the question again, I'll put my money on the United States.
For sure. Especially as we continue to as the dollar demarcates is the primary currency of business, until such time as that changes, then, I'm 100% with you. At that point, who knows? That would be even more interesting.
That's a different scenario, and we were talking about that pretty seriously a year ago. But all of a sudden, that talk's gone away too.
100%.
No, it came back 2 weeks ago.
Yeah.
So I'm curious, does the level of automation have any impact on who's the winners and the losers? For example, Gerd, you mentioned earlier that U.S. is probably local domestic manufacturing is likely going to try to crank up that capacity. Let's go from 70 to 80 to 90 so we can respond and avoid that. Then we see China got more lights out factories than anyone else in the world, right? European has a higher uptake of robotics and automation than, I think, per capita than the United States.
Yeah.
Does that have any impact?
Yes and no. It depends on the flexibility of the labor market. I think honestly right now, what's going to push tariffs, I don't think are going to push automation a ton.
Okay.
On the other hand, the increases at the border, increased security at the border to keep the migrants out, that's going to shrink the labor pool. So that's going to drive up. Stu was talking about companies adding second and third shifts. Well, they need people to add second and third shifts too. But,
right.
I've got customers who are talking about, including some big ones, figuring out how to do lights out and do it economically here.
That would seem to be an opportunity.
Yep, that could be a gold mine.
Beautiful.
Well,
go ahead, please.
Yeah. So will reshoring have other unintended consequences, like a push for retasking or an increase in surplus automation equipment in certain regions?
The surplus, that might be an interesting thought. Typically, when you see these kinds of market upheavals, there'll be winners and losers in the domestic market. I think the key is keep your eyes open and see if there's opportunities to acquire that equipment, because certainly the lead time on it would be nearly zero other than deinstall and reinstall. And there's a lot of good quality equipment that's out there. So I think there's certainly an opportunity there. And from the labor pool thing, one of the things that I found is interesting that I wanted to get your all's opinion on is a lot of manufacturers and even engineering firms are looking for experienced people and won't hire young people, even though the younger people today have been better trained and better groomed for automation than any generation in our history, with the STEM programs and stuff going on.
Mm-hmm.
So do you guys think that there'll be an increase of willingness to be able to hire younger people that are coming out of these STEM programs and universities, or do you think everybody's going to be trying to hire only the older, more experienced people out of fear of having to do all the training and heavy lifting with young employees?
The winners will be the ones who figure out how to adapt to the younger workforce.
Yeah.
Yeah.
You have to.
We do a bit of both. And we're trying to do exactly what Jeff said, figure it out. We've got some young people and we're training them and they're very smart, and it's more just getting them experience than anything, and just giving them some basic guidance. I got some young people. I got a young lady, give her a tablet and she just got a grin on her face and she does good work and quickly. But she also knows when to ask questions. You got the seniors, it's good, but sometimes they're also bad because some of them think they know better how to do something than the people already here. So that's always fun to deal with.
Yeah.
But
We've done a good job of that in Metaphase. We have some young Turks in our engineering group who have really shined and brought some innovation and creativity to our product development.
100%.
Yeah, absolutely. I mean, I think they're able to work with tools that we have at our disposal now much quicker and adopt, which is an advantage. And I think as business leaders, it's our jobs to enable them and to train them. And I think taking that person and transporting experience and guiding them is our job. So I very much see that being the future.
Yeah. And you said the key word, enable. Got to enable them.
Correct.
Absolutely. Absolutely. So, gentlemen, we were hoping to maybe just take 30 minutes out of your day. We're up, as usual, well beyond that. So thought I might go ahead and ask a final question. With just 2 weeks before Automate right now, I believe everyone on this call, as a matter of fact, I would say that with 100%, either you or your company and representatives will be at Automate in Detroit in 2 weeks. And we'll, so if we could just go around the table and start with you, Jeff, what are you most excited about seeing while you're at Automate? And you can't just say your stuff. Okay, we know you're excited about your stuff.
Well, it's kind of that kind of is the answer. We've done a terrific job at Metaphase developing new products in the last 2 years. We've done a poor job of letting the world know about those terrific products and what we have on the market today that we think is as good as or better than our competition. So we have new initiatives going on right now, and we expect this year to be a very good year for that, promoting these products that we developed over the last couple of years. We just need to do a much better job at marketing and communicating the message to our marketplace.
I bet you there's still a lot of people out there who don't know Metaphase has the largest machine vision lighting portfolio on the market right now, actually.
And that's our fault. That's no one else's fault but ours, and we're addressing it.
You'll fix it.
Okay, I'll look you up.
Great.
Gerd, you stepped up, sir. So what are you excited about, Gerd?
I don't know. That's the beauty of trade shows. I
don't
don't go to trade shows to see the stuff I know about.
That's true. That's true.
Fair enough.
That's very true.
I go to find out what interesting new things companies got coming out, to see what the new trends are.
Yeah.
To learn, and then I'm exhibiting. It's also, I want to hear what the customers are looking for.
Yeah.
What are they asking me about? What are they trying to achieve? Because that's what guides me. It's what.
No better place to crowdsource truth than at North America's largest group of your customers, right? So.
Yeah.
And of course, then there's all the cool, shiny things, which I confess, being a super geek, is my favorite thing. I love the demos and what creative things that you guys put in your booth to demonstrate what's capable in this big.
And what's really fun is when I get my engineers to go through, and then they tell me what's really interesting, because I think I'm pretty smart, but I got some smart engineers, so I just listen to them sometimes.
Well, considering how big the show has grown, letting them walk the whole thing is not a crazy thing, to tell you the truth. You can just hit the highlights.
Yeah.
Jason, what are you thinking, man?
Yeah, it's always good. I mean, in our community, to see our peers and see what everyone's working on and their innovations. I think in general, we all want everyone to be successful and to have their success stories in the market. So that's always a positive. And I'm looking forward. I think there's collaborations going on, which is always good to see specialists working with other specialists. And I think we'll see some of that in Detroit. So looking forward to it.
Beautiful. Mr. Shepherd, other than getting your award.
Well, that'll certainly be a highlight. But actually, I go to the shows for networking with customers and with the industry. A lot of my mentors will be there, and I'll continue to learn from them. And I hope to recruit some new mentors because the market's constantly changing. The big thing I'm looking for, as far as what's new, is some of the newer sensing technologies that are out there that enables robots to be smarter and utilize AI and other capabilities, especially as it relates to depth sensing and time and flight 3D applications. Because frankly, the biggest movement in robot applications to make them successful has been the sensing and the work around the robot. And I think we'll see a convergence of cobots and traditional industrial robots in the future as sensing technologies get better, to enable more collaborative applications. Because you can see it already kind of coming together. You can use industrial robots for collaborative applications and vice versa if you have the right standards in play and the right equipment in play. So that's kind of what I'm going to be looking for. But the biggest thing is just get a sense of the marketplace, check everybody's pulse, check to see if we're still friends. Keep moving.
Depends if they were up for the award or not.
We can always buy him a cup of coffee.
Yeah.
There's always next year.
Yeah.
Well, gentlemen, I look forward to finding you toward the end of the show and hearing from people smarter than I am about what you found to be most interesting, because that to me will be, very informative. So,
Yeah.
again, I want to thank you all very much for joining. This has been our 100th episode again. It's been a fun one. We appreciate your time. For anyone that has questions for Jeff, Gerd, Jason, or Stu, or for us, you can reach out to us at manufacturing-matters.com. Or otherwise, we hope to hear from you soon and see you all at Automate. So thanks very much.
Thank you.
Safe
Thanks, everyone.
travels, gentlemen.
Thanks.